Well, it's all changed on the coronavirus loans this week, and there's a new kid on the block. A little brother for the much maligned coronavirus business interruption loan scheme. My name's John Davis, and I'm here to tell you all about it in this short video. Now, in a bit of a boost for the little guy, the Chancellor announced on Monday the new bounce back loan to be launched next Monday, the 4th of May. Now, these loans are aimed at small businesses, and the government will guarantee 100% of the loan. The idea of this is to basically get things moving by making the process quicker and easier. They're promising a short online form, no need for cash flow forecasts, and payment within a week. So, what are the details? Well, in summary, you're about to borrow between £2,050 and £50,000. That amount will be capped at 25% of your turnover. There'll be no interest or capital to repay in the first 12 months, and the loans will last up to 6 years. To be eligible for the loans, you need to tick 3 boxes. The first of which is you're based in the UK. The second is you've been negatively affected by coronavirus. And the third is that your business was not an undertaking in difficulty on the 31st December 2019. Basically, the government wants to make sure the loans are going to viable businesses with a chance of paying it back. What they don't want to do is prop up businesses that were failing anyway. In addition, you can't apply if you've already borrowed through the coronavirus business interruption loan scheme itself, but you will be given the opportunity to transfer your loan from that into a bounce back loan any time between now and the 4th of November this year. Now, we don't know what the interest rates will be on this yet, so it will be interesting to see what they come up with. However, the government did promise they'll be working with the lenders to agree what they're calling a low rate of interest. Now, on the face of it, this looks a really useful loan and a much needed boost for business to get cash quickly and cheaply. So it's got to be a good thing. So what about the coronavirus business interruption loan scheme itself? Well, that's kind of the big brother of the loans now. It's come with a lot of criticism since it was launched in March. The bank's been asking for a lot of information, and the approval process has been very, very slow. And by last weekend, according to the papers, only 6,000 loans have been approved out of 300,000 applications. So perhaps in a bit of response to criticism and also from the arrival of its baby brother, the large banks announced today a change to the CBILS itself, and basically the 7 largest lenders to SMEs released a joint statement, and brownie points if you can name all 7 lenders. But basically it's a longish statement, but the important wording is, and I'm going to read this actually off my screen over there. Lenders will only ask businesses for information and data they might reasonably be able to provide at speed, and we will not require the provision of forward-looking financial information or business plans from businesses applying for CBILS-backed lending, relying instead on our own information to assess credit and business viability. Now, the point here is that they're reducing the amount of info you have to provide to get the loan. Instead, they're going to look at what they already have. Because at the moment, that effectively the high street lenders, these big lenders, are only offering the loans to the current customers anyway. So therefore, they already know what your bank account looks like and whether it's well managed, which they think gives them enough information to make a decision whether to lend you the money. Overall, the idea is, but by reducing the kind of the information required, this will really kind of increase the speed of processing applications and getting the cash out there, which is kind of the key thing right now, getting cash to you and people who need it for their businesses right now. So what's it all mean? Well, for me, there are a few things to take out of this. The first is that for both loans, they really are pushing to get these out quickly to help businesses who need the money and need the money right now, which has got to be a positive thing. The second is that both loans are generally at kind of low interest rates. Now, the CBILS, there is a range of rates because there's a range of lenders. But from the high street lenders, the main lenders, we're seeing interest rates at around about 3%, which is a really good rate. And some of these are also offering capital repayment holidays, i.e. some lenders provide you loans where you don't pay any capital or interest in the first year. Now, officially, the government will fund the interest on both CBILS and bounce back loans for the first year, no matter what. And the bounce back loan definitively has no capital repayments at all in the first 12 months. But we've already actually seen that from a number of the CBILS loans as well, even though it is not compulsory on those. So it is there across both loans, which again is a good thing. And like I said, those are good things, but I would offer kind of a note of caution. Even though there is the need for a cash flow forecast, I would still suggest you do prepare one for your own use. Sometimes when it becomes too easy to borrow money without thinking it through, people borrow it who can't pay it back. So please do look at your budgets and your ability to repay when the payments do kick in next year. But overall, I think this is really kind of positive stuff. It'll be interesting next week when the the bounce back loan is launched to see what the form does look like and see what interest rates are coming out. But like I say, if it's getting the money out there quickly, that's a really good thing. Now, if you do have any queries about borrowing, please do get in touch with us. And if you'd like more tips, please subscribe to our YouTube channel, and I will see you soon.